the health of the American economy depends on the health of America's people of color.
For many years, people of color have called for more regulation and better attention to lending institutions and improvements in reforms. So says Algernon Austin, the Economic Policy Institute's director of the Program on Race, Ethnicity, and the Economy, at a forum recently held to address the issue of race, ethnicity, and the subprime mortgage crisis.
Unfortunately, the response to those calls were inadequate, and those bad policies were allowed to persist and grow and expand, leading us today to the subprime mess.
It wasn't all that clear cut, and some judgment had to be.
Gregory Squires, a sociology professor at George Washington University, suggests that part of the problem lies in the judgment a loan officer must make when faced with applicants whose credit reports are less than perfect.
If we know somebody, we don't have to go out and spend time and energy and money getting information. We may know about compensating factors in those borrowers, and we may be willing to approve a loan that we might not otherwise make. And when your bank lending officers tend to be white and male, the kind of people who they're likely to know are people that look and act like them.
What we saw a lot of is just people getting steered towards the higher cost houses or the higher priced houses because they could get a higher commission for the higher priced houses versus them thinking, oh, let's take the time to help them find a house that they can actually afford and can sustain.
The alarming rise in foreclosures among Hispanic homeowners has led La Raza's Graciela Ponte to counsel the community on a plethora of home buying issues, including qualifications versus affordability. She details how fraudulent practices have become common and that even the products offered are suspect.
I'm sure you all are familiar is the rapid growth in exotic products, pick a payment, option arms, adjustable rate mortgages, and all kinds of things. One lady who was a cleaning lady making cash money, who on her loan documents they had written her up as a doctor. I had a construction worker who was written up as an engineer. They stated his income as $80,000. And so just a lot of fraud was going on throughout our community.
According to Wilhelmina Lay of the Joint Center for Political and Economic Studies, fallout from the staggering number of foreclosures due to subprime lending practices is just part of the story.
As long as you have foreclosed property standing there, nobody is paying real estate taxes. And when when people are not paying real estate taxes, local governments don't get as much revenue as they would otherwise. When local governments don't get as much revenue as they would otherwise, guess what happens? The schools don't have as much money as they might, or they don't have money for summer jobs, or they don't have money to open the recreation center, all of which has spillover, second round, third round effects, and that's what we can look forward to, in quotes, around the country as this foreclosure situation sort of works itself out.
Debbie Bochin from the Center for Responsible Lending says that the federal efforts are not quite enough to help current borrowers facing foreclosure and to discourage predatory lending practices. She offers these solutions.
The first, and we think most important, is to ban discretionary pricing. Right now, loan officers, brokers can pretty much charge anybody whatever they want. You don't have to get offered the best rate that you qualify for. And having that discretion just lends itself to discriminatory practices, whether implicit, explicit, intentional, or unintentional. We think really the best way to help people who are currently facing foreclosure is through bankruptcy reform. If you file for bankruptcy, a bankruptcy judge can modify your credit card loans, the loans on a vacation home, the loans on your boat, the loans on your car, the loans on your investment property, but not the loans on your primary residence. It's a crazy, crazy loophole in bankruptcy law that needs to be closed, and we estimate that about 600,000 subprime borrowers could be saved if that loophole was closed and judges were actually able to modify loans of people who have been victimized.
The panel concluded that possibly the worst of this problem is yet to come.
Of the loans made to Latinos in 2005 and 2006, 1 in 12 will end in foreclosure. 1.8 million foreclosures overall are predicted in 2008. And the height of the crisis for Latinos will not come until 2009 and 2010 when option arms and interest-only loans are scheduled to reset. This is actually where most of the Latino loans are. So we haven't even started to see what can happen.